because it might be harder to raise money. So hopefully that ends up what happens with Uber. I do think post-crisis, post-vaccine, this company is just so exciting on so many levels. So I'm staying long. It's a lot of volatility. Today it doesn't look great, but I'm not going to go.
All right, Anastasia, it's been nice seeing you again. Thank you for being here. Take us, take us to the end of the day here and in the days and maybe weeks ahead. What does today mean, if anything, in the bigger picture?
I think we were overdue for some sort of a pause and consolidation. I don't think it's a massive change in trend. I think we were going to learn to live with this virus, whether it's technology, whether it's biotech breakthroughs, but chances are we're not going to go to the mass lockdowns. So that, the Fed, all of that should support the markets. For me personally, right now, I'm looking to healthcare and biotech. I think that's really going to be a critical space to watch going forward. We've seen it in a broad range in the last 5 years. I think we can break out of that in terms of biotech in the next 2 or 3 years. So that's what I would be adding to on this pullback.
All right, good stuff. We'll see you soon. Jenny, do you have a final trade?
Sure. Umpqua Holdings. It's a regional bank. And when we talked earlier about discernment, I think this is one, if you're careful and discerning, you can make a lot of money in the long run. It's rock solid. It's going to benefit from the increases in mortgages. Low rates actually aren't too terrible for it. I love this company.
Jimmy?
Raytheon Technologies. It's got a great defense business, but it's also kind of a closet way to play Boeing getting the 737 MAX back in the air. They've got a lot of product on that platform.
Josh, you got about 30 seconds. I mean, I like your final trade, but I'd also like you to entertain that same question that I asked Anastasia about, just sort of put today into context for people.
Yeah, I would just say we've had so many plus or minus 2, 3, and 4% days this year, more than in most years. So I just think it's indicative of the environment. I don't think it's the end of the world. Final trade is Clorox, which is the Tesla of sanitation. I just think the stock's on the verge of a breakout. And this is the company that will see elevated sales for a long time as we enter a new phase in just public cleanliness and hygiene. I don't think we're going back to living like cavemen like in 2019.
Good to see everybody. Thanks for watching. It does it for us. Kelly picks it up right now.
Thank you, Scott. And we have a major reversal to the downside on Wall Street today, with stocks selling off for the third straight session and by the biggest proportions in quite some time. We're down more than 1,500 points, or 5.5% on the Dow right now. In fact, those are the biggest points declines for the Dow and the S&P in 2 months. Sentiment is weighed down by concerns over an increase in COVID-19 infections and by Fed Chair Powell's not so rosy outlook for the rest of the year. Let's dive right into today's drop with Dominic Chu, who's got all of the numbers for us. Dom?
All right, so Kelly, we haven't seen these kinds of drops since just around the lows or before the lows of the COVID-19 pandemic back in mid to late March. So we're watching the Dow down by about 1520 or so at the lows of the day. So right near the lows of the session, the S&P off 4.5%, 145 points. The NASDAQ down by 4% as well. So trying to put together some kind of holding pattern here, given what we've seen. Now, take a look and walk with me here with the sectors. Every single one of them is in the red today. Defensive, cyclical, it doesn't matter. The gains are being led by consumer staples, or rather relative losses. Consumer staples, communication services, consumer discretionary. Meanwhile, financials and energy, the real laggards so far today. Now, let's take a look at some of the big themes that we are seeing develop, because it has been a play recently on the economic recovery. Those companies that do well. Look at the small cap stocks. They've been outperforming. They're the white line for quite some time here over the course of the last month. And now they've seen a huge dip. That's something to watch, small caps versus large caps. Also take a look at some of these groups now as well. One of the things to watch is some of those stocks that have been a play on the economic upside. Oil and gas, ExxonMobil down 6% today. Southwest Airlines, will people travel more? Down 10% today. Darden Restaurants, will people dine out more? Well, it's down 7.5% today. And then consumer discretionary, mall operators, Simon Property Group down 12.5%. We'll finish here with some of these moves. Look at what's happening with the financials and interest rates. The bank ETF off 7% right now. Treasury note yields actually ticking just a little bit to the high upper end today here. On the price side, lower yields, and the difference between long and short-term rates, Kelly, has ticked lower. That's not necessarily good for banks. All of those trades and trends to watch. I'll send things back over to you.
Yeah, we like steeper curves, not flatter ones. Dom, thanks very much. And he was just alluding to this. We have some big moves in rates in the dollar today. Let's bring in Rick Santelli out at the CME with more on that for us. What jumps out to you, Rick?
You know, I think what jumps out to me is just a very generic way to look at the world. Right now, we're more in a risk-off mode, obviously. Look at equities. And I think risk-off mode is going to be much friendlier to the dollar. You know, when the world was all coronavirus in the beginning, the first few chapters, everybody was nervous on the global effects that it was going to have, how it would bring down economies. Of course, the dollar reigned supreme. Much of the funding was in dollars, and there was a scramble for dollars. Well, the Fed addressed that to some extent, and the pressure's eased. If you look at this chart of the dollar index, basically, the month of June, we saw close to a 3% drop. But today, as the world is a bit nervous again and potentially hotspots maybe flaring up again, you see that the pressure on the dollar was released a bit. I think that makes sense. And as we look to the fixed income markets, and the 30-year bond auction's wrapping up now, we'll cover that in a few minutes. The Germans had a 30-year auction, and they just couldn't get enough of it. It was like feasting at the all-day buffet, and that gives us some enlightenment. Well, there is still a very big demand for sovereign high-quality credits, whether it's bonds or whether it's treasuries. So when the equity markets get a little nervous, look at the 2-year. Hardly any movement at all. But look at the charts of the 10s and the 30s. Look at the yields drop as we see global demand pick up on the buy side of this, and I think it makes sense. And the correlation with this super big drop in equities seems to go hat in hand with the notion that no matter how good stocks looked and how excited people may get to the reopening, it's going to be uneven. And when it's uneven, they sell stocks and they buy treasuries.
And they're certainly doing that en masse today. Rick, thanks so much. Like you said, we'll see you again in a moment. But with today's steep declines, each of the major averages is seeing sell-offs reminiscent of the worst moments of the COVID crisis. There's only about 3 times that the Dow has lost more points than this on the close. We'll see what happens over the next couple of hours. There have been some red flags lately, like all of the frothy retail buying, the rising coronavirus case count in some parts of the country. So how much deeper could this correction go? Joining me now are Peter Bookvar, Chief Investment Officer at Bleakley Advisory Group, and Jeff Kilberg is CEO and founder of KKM Financial. Both are CNBC contributors. Peter, I'll start with you. What do you make of it?
Well, in perspective, the S&P 500 is essentially back to where we were 2 weeks ago. I think we've taken out of a lot of fluff over the past couple of weeks with this trip back to unchanged on the year in the S&P and up on the NASDAQ. Now, obviously, in January, 2020 was estimated to be quite different than it's turning out to be. Estimates for 2020 in January were expected to be $170 a share. Now, while it's a throwaway year, we're talking like 120 to 125. So I know everyone was scratching on their heads. Why are we at these levels? And I think, as you said, the coronavirus count case going up was certainly a reminder that there's still going to be a bumpy road. We're going to see over the next couple of months what the state of the economy is going to look like as we reopen. Sentiment got very extreme. If we look at the investors' intelligence numbers, where the spread between bulls and bears were the highest since mid-January, the Citi Panic Euphoria Index was in euphoria land. And also, as you mentioned, all the speculation going on in a lot of these bankrupt companies was just a sign of froth. So we were due for this. Wasn't expecting it all to happen in one day, but this is the type of market that you're in when you have a VIX that is around the 25 to 30 level.
Yeah, still pretty high. Jeff, I'll bring you in on that. As Peter said, you don't expect it all to happen in a day, but maybe you'd be happy if it did. How would we know whether this becomes a 5.5% kind of one-day correction or whether it's the start of a 10 or a 20% move?
Well, Kelly, I think it's a great point that Peter brings up about the VIX. And let's look, where was the VIX last Friday? It was at 26. So here, nearly 40% higher, we're only at 35. Kelly, in the year of 2020, a VIX of 35, that's a walk in the park. So I see this as opportunity, not fear. And what's interesting to see, Peter bring up a great point about the dislocation in the stock market versus the reopenings as we continue to measure and gauge these reopenings. But what we are seeing is that the passive methodology, the passive investing in the last decade, I think that has come to an end. I think you have to become a stock picker. You can also utilize ETFs, but we are seeing opportunity in this pullback. And yes, the velocity of this move is sensational today, but this is nothing in comparison to the month of March. So I think I really am embracing this, and this is an opportunity. Look at the movement in industrials the last 2 weeks. That movement in industrials, that's not a fad. I think that's going to be a bigger theme in 2020 as we see some of these worse S&P sectors like energy as well as industrials gravitate investors.
It's interesting, Jeff, you say people have to be stock pickers. Well, that's exactly what they're being right now. I don't know if, if picking hurts was your idea of, of kind of how people should be approaching this, but you are saying you think that energy in particular, where crude is off about 10% today, and the sector is back on its heels. Why do you think that's a buying opportunity?
Well, energy is actually, from a technical perspective, for the first time in a long time, Kelly, it's been illuminated on our matrix. So if you look at XOP, that's oil and gas exploration, which is an interesting ETF because there's a broader swap exposure instead of just picking a name like Chevron. But we do like a name like Chevron, and of course we're going to see volatility. But let's think about what happened. And I think the person who's really smiling today, Kelly, it's Fed Chairman Powell. He has a big smile on his face because of the fact on March 23rd, when he came out at the very low, he told the market that they will be there in an unlimited capacity in perpetuity. The S&P 500 skyrocketed 48% since he said that. So I think he's relieved to see a little bit of selling pressure because we were a little bit over our skis at 3,200 on the S&P 500.
No, that's an interesting point. And Peter, I know you're obviously very concerned about this, about how the central bank kind of bid in the market, gives people the green light to just keep buying hand over fist, and whether that takes us back to the late 90s, the dot-com mania and all of that. But at the same time, I don't think the Fed wants us on our back feet because of a spread in COVID cases or anything like that. So, can we have it both ways here? Can we get a market that's less frothy but still rallies?
Well, the whole point of the Fed cutting rates to zero and doing all this QE is to encourage speculation. And that's what they want. So where that speculation turns up is they don't necessarily care. They just want to stoke things. Now, obviously, they hope that speculation is more economic speculation in terms of households and businesses spending and investing. But I think we've seen from the experience over the last 10 years in the U.S. and certainly in Japan and Europe that just cutting rates to zero and printing money, it doesn't transmit into faster economic growth. And it transmits into other behavior, such as speculating in the markets. So what the Fed did, at least yesterday, by saying that we may not raise rates for years, and we're going to continue printing $20 billion of money out of thin air and buy treasuries every single week until maybe our balance sheet's $10 trillion, even though they didn't give that number. Well, look what they're doing to the banks. The bank stock index was down 6% yesterday. It's down about another 6% today.
Wow.
So their actions are actually being detrimental to a very important part of the U.S. economy, and that is our banking system, by damaging their profitability. Again, we saw that in Europe. We saw that in Japan. So I shouldn't be looking at the Fed as somehow this savior and this booster to economic activity. I think we have to also see what the side effects are of what they're doing here.
Real quickly, I want to just get a tactical move from each of you. Peter, what would you be buying here?
Well, actually, I agree with Jeff on the energy space. I happen to like the commodity area, agriculture, energy, gold and silver, copper, that have been bombed out because the economy around the world will improve over the next year. I do think we're going to see higher inflation in the latter part of this year and into next year. And that's one area that I find very cheap and could be a play on that if I'm right.
All right. So you guys agree on energy. But, Jeff, I think you disagree about buying gold. You'd be a seller here?
Our model just actually sold gold today, so I think there's going to be an opportunity to buy it lower. And I think it's interesting, with that weaker dollar, why is gold not higher? But we're looking at two names in retail, Gap and Signet Jewelers. Those are specific names that we really like right now, and we're long. We also like two industrial names, Masco and Xylem. Xylem touches the water space. So these are two names that you typically don't hear about in the industrial space, but I think the retail as well as industrial, you'll see additional rotation out of financials, out of the NASDAQ 100 names. So I think there's opportunity, Kelly, and we're trying to embrace that opportunity right now.
Yeah, well, opportunity to buy those stocks a lot lower today. All of them seeing 4 to 8% declines. It's great to have you both here, guys. Thank you.
Thank you.
Jeff Kilburg and Peter Bookvar talking through these markets. Now we have a news alert in the bond market. Let's go back to Rick Santelli for the results of that 30-year auction. I hope it went off a little better, Rick.
I was generous today. I gave this auction a C-, so a bit below average. Let's go over the details. It's a reopening of 30-year bonds. 19 billion of them to be exact. The yield, 1.45. That was definitely on the high side of where it was trading in the one issue market, but it didn't really spike out too badly. And all the internals of this are just slightly below average. 230 bid to cover, 62.2 on indirects is actually the weakest since just February of this year, so not so far back. 13.3 on directs, and maybe the most enlightening aspect of this auction is that dealers took about 24.5% of the auction. That's the most they've taken since September of 2019. And when dealers take a lot, it's because investors haven't. So it was a bit on the light side with a C-. But do keep in mind, it's almost worse than that, because on a day like today when equities are down and you see how yields have dropped rather dramatically, I'm a little surprised we didn't get a bolder response by investors jumping into the auction of this long duration, sovereign, high quality security. Kelly, back to you.
I totally agree on that, Rick. I mean, you said in Germany, their 30-year auction, they were feasting at an all-day buffet where the demand was so strong. And here they're like picking at a cauliflower pizza. It is odd. And the reason why I ask, as you said, it's usually good if there's not huge demand for the safest haven asset. But again, I keep thinking about all the issuance we're going to have. And you just, you don't want auctions getting a C and a D and worse grades all the time.
I agree. There's all these questions as to whether equities should be here. And today, obviously, we're realigning a little bit. But in the grand scheme of things, inflation could save the day down the road and equities would be fine. I'm much more worried about the trillions and trillions of debt around the globe eventually pushing yields up and definitely making the demand for the auctions considerably less, maybe even than C-minuses down the road.
Yep, as we just got today. Rick, thanks so much. Rick Santelli with the auction results there. Let's get to some big news on Instacart this afternoon. Deirdre Bosa here with the details for us. Deirdre?
Hey, Kelly, Instacart has raised $225 million, valuing the company at $14 billion. Now, it last raised money in 2018 at a valuation of just under $8 billion. So the latest now makes it one of the most valuable unicorns in the U.S., bigger than other sharing economy names like DoorDash and Postmates, and bigger than several public ones like Lyft and Grubhub. Now, the round was led by DST Global and General Catalyst. In a statement, Instacart CEO and founder Apurva Mehta says that, quote, COVID-19 created a massive shift for the grocery industry. Overnight, Instacart became an essential service for millions of families. Now, Instacart has, of course, been one of the biggest benefactors of that shift. According to research firm Second Measure, it is now the biggest player in grocery pickup and delivery. Its market share jumping to 55% in mid-May, up from about 30% in February, and surpassing Walmart. Now, at the same time, Kelly, the latest funding round comes amid rising unrest from Instacart's shoppers and growing scrutiny from lawmakers. Back to you.
That's true. And we know the regulatory scrutiny often follows, as it has with Airbnb and so many other business models. Still some big news for them and a sign maybe of the pandemic plays that are really working. Deirdre, thanks so much. Deirdre Bosa with that funding news. Going to take a quick break. Coming up is the frothy trading in bankrupt companies and penny stocks, a sign that the sell-off may just be getting started. We'll dig deeper into that. Also take a look at shares of the S&P High Beta ETF. It's on pace for its worst day since March. The move is led lower by Freeport-McMoran, American Airlines, and Under Armour. Those are your high beta names today. We're back in 2.
Hi, this is Mike Tirico, introducing you to Sports Uncovered, the newest podcast series from the storytellers at NBC Sports that will shine a fresh light on the most unforgettable moments in sport.
The reason why I'm smiling, I might get in trouble for this.
Search Sports Uncovered to start listening today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
Are you fully informed on the NBA? On the NBA Hangtime podcast, veteran sports writers Sekou Smith and John Schumann analyze the latest NBA news, storylines, and discussions with guests from around the basketball universe.
Isaiah Thomas joined us here on the Hangtime podcast. Isaiah, good morning.
Everybody's doing well. As you know, my daughter tested positive.
Search NBA Hangtime on TuneIn to listen.
Ready to talk brass tacks on what's happening in Major League Baseball?
Turn to the Effectively Wild podcast from Fangraphs for daily statistics, analysis, and commentary.
One team will say, yeah, we're going to keep paying minor leaguers their stipend, and another team will say, we're going to extend the stipend through this month, and then another team will say, nope, we're cutting them off. So are extending it at least through August, which would basically be the end of the minor league regular season.
Search Effectively Wild on TuneIn to listen.
It's TuneIn Sports on this day. On this day in 1959, Charlie Sifford becomes the first African-American to play in the U.S. Golf Open.
Charlie Sifford changed the game of golf, one hole at a time. The first black golf.
Welcome back to the Exchange. Even as stocks have sprung off their lows this year, the bills for getting through COVID could be coming due for a long time. Business debt in the January through March quarter surged by the most since 1973, according to the latest Fed numbers. Could this spoil the stock market's continued rebound? For more, I'm joined by Mark Lashini, Chief Investment Strategist at Janney Montgomery Scott, and Terry Spath is Chief Investment Officer at Sierra Investment Management. It's great to have you both here. Mark, I'll just start with you on this debt issue. I mean, this is a huge increase, and you just wonder if it's going to act as a brake on the recovery.
Well, Kelly, it sure could. I mean, the good news is, at least prior to the pandemic, consumer balance sheets and income statements, for that matter, were in particularly strong shape. We had seen wage increases occurring at a regular basis. Debt had been pared down to levels last seen a generation ago. The service costs in those debt levels, because of low interest rates, are at multi-generational lows. So as a consequence of that, we've seen a buffer in place. Of course, that's only been exaggerated by the government's largesse here by way of the stimulus checks. And so we saw a spike in the savings rate here just in the last couple of weeks, up to 33%, which is like anything we've seen, even greater than that, which we saw in the aftermath of World War II. So hopefully there is some powder dry that can be available as funding to support those indebted levels. As a consequence of it, that leaves consumption largely to continue to prime economic activity. But if it should continue to mount by way of the coronavirus spread continuing on for a considerable period of time, it would become increasingly worrisome to what's needed to restart the economy, which is, of course, consumer spending.
Yeah, no, absolutely. Terry, I'll bring you in with kind of the same question. And also just looking at the markets the last couple of sessions, were the kind of gains off of the lows a one-time phenomenon? And do you think that the rally looks very different from here on out?
Yeah, thanks, Kelly. I mean, I think the biggest question, the biggest question that we have received recently from our own clients is, why is the market doing so well with the data being so disastrous in the economy? And so I think that that's reflective of the fact that we've just had such a big and sharp bounce back from the lows. And in our view, risk matters, defense matters, discipline matters. And so just chasing returns because the Fed said, we're going to buy everything, it doesn't mean be a zombie and buy everything. It means pay attention, have discipline, and look at risk as well as return. And so make sure that you're aware that there can be a lot of volatility throughout the summer as this market got a little bit ahead of itself more recently.
It's interesting, Terry, because one of your investment calls is actually to buy high yield debt. The very debt that companies are issuing to get through this that we're worried could be a hangover on the whole economy. But why does that look attractive? Because it does offer kind of relatively better yields right now.
Right. So, let me be careful about how I say this. So buy high yield corporate bonds over small cap stocks. So companies that are growing quickly that need to borrow money, not to excess like Mark was just mentioning, but that need to borrow in order to grow can be high yield corporate bond companies or issuers of high yield corporate bonds versus small stocks. If you're looking at the risk return and you want exposure to that and you're not trying to be super timing, high yield corporate bonds over small stocks. Similarly, emerging market debt over emerging market equities, preferred stocks over financial stocks. So again, always being conscious of the risk that's involved. We hate drawdowns. We hate losing money. We want to earn a nice return like everyone else, but I think sometimes we can forget about the risk that's involved.
Yeah, and the kind of comparative places to look for that return. Mark, let me turn back to you with a question about the coronavirus specifically. Are we going to have to wait for the case count to stop rising or to kind of start cresting in some of these states, especially the southern states, before the market can find its legs again?
I don't know that it'll have to come to that, Kelly. I mean, obviously the market moved in advance of the peak in cases across the United States in the aggregate. So I think what we want to see is, of course, that the number of new cases cases arrests, at least by way of the rate of change of them. Not necessarily that they have to peak and go down. In fact, I think it was pretty widely expected that as these states reopened, Georgia, of course, the first one to do so, that we were likely to see some spread of new cases, as long as it doesn't, though, become uncontrollable, either by way of an acceleration in the cases so egregiously high as to concern those that might worry about a renewed lockdown of these states, but as well that which doesn't, hopefully by way of fatality or before that morbidity, overwhelm the healthcare system again, which is far away from where we are, at least at the moment. And so I think any kind of news that shows that the number of new cases, while growing, isn't set to overwhelm the healthcare system, I think the market will ultimately get its legs again, concurrent to seeing economic activity once again percolating back to life as we're seeing not only domestic conditions improve, but the global economy as well.
Yeah. All right. Mark Lashini, Terry Spath, good to check in with you both. Thanks. We appreciate it.
Thanks, Kelly.
And coming up, Regeneron shares are hitting an all-time high today despite the tough markets. The company beginning human testing of its COVID-19 treatment. Ahead, we'll speak exclusively with the CEO of Corning about the timeline for delivering COVID drugs and vaccines. Plus, a look at how retail traders have been profiting off the backs of billionaire hedge fund managers, so far at least. Is today the start of a big trend reversal? And take a look at the big Dow losers right now with the index down 1,364 points. Boeing having a major reversal day, down by 11% right now. Dow Inc. and Travelers lagging as well. We're back in 2.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
Who says you can't have a laugh while getting serious about America's pastime? On the daily podcast Locked On MLB, comedian and baseball fanatic Paul Francis Sullivan talks about each team, each pennant race, and everything else in the game, from rule changes and controversies to baseball cards and stadium food.
For those of you who are not familiar with me or the old show, I love to obsess over baseball. I'm talking baseball over the Super Bowl. We had a TV show in the division series during my wedding.
Search Locked On MLB on TuneIn to listen today.
Are you ready for the realest firsthand take of what's happening in the NBA? On their podcast, All the Smoke, former NBA players Matt Barnes and Steven Jackson bring their fiery intensity to the mic, dishing on the latest news and drama from on and off the court without boundaries.
Half man, half amazing. My friend, our brother, Vince Carter, man. Welcome to the show.
Yo, what's up, man? What's up, my brother? On, man?
Search All the Smoke on TuneIn to listen.
Welcome back. Boeing and the major airlines are getting crushed today after they saw a massive rally over the past week. Let's get out to Phil LeBeau for more on what's driving the action here, Phil.
Kelly, this is a case where people said anytime you have stocks or a single stock that's going up 100% over 3 weeks, maybe it's time to take a little bit of profit. That's at a minimum what's going on. You mentioned that they're all getting hammered today. They're all down between 8 and 11%. When you look at the airline index, and we're going to show you this over the last month, look at the run-up that they had the previous 3 weeks, and that just came to a screeching halt on Monday, and that's when you started to see the sell-off, down about 20% this week. Some of the individual stocks we want to highlight here. First of all, American Airlines. This is a company that has said, look, we're making progress in terms of cutting our cash burn. We did expect it previously to be $50 million a day by the end of June. We now think it'll be $40 million per day by the end of June. That is encouraging news, but clearly it shows that this is a sector where they're going to continue to burn through cash, at least through the summertime. Delta out raising another $1.25 billion in a debt offering that they unveiled yesterday. That closes tomorrow. And then let's talk about Boeing and one of its chief suppliers. Now, shares of Boeing, like the rest of the airlines and aviation sector, this is the primary drag on the Dow today, down more than 10%. And Spirit Aerospace, this is the company that makes the fuselages for the 737 MAX. Well, Boeing sent them a letter saying, hold off on the production that you were going to begin on 16 of those fuselages. And as a result, Spirit has said, okay, well, for the next 3 weeks, we're going to have to lay off some workers. So still a bumpy beginning to that restart of production for the 737 MAX, at least when you look through the whole supply chain. Kelly?
Also, Phil, it's interesting to kind of pivot to the automakers, look at what's been happening there with Tesla's market cap. I think yesterday we said it was $186 billion. Nikola, which has never sold a car, $24 billion. Whether you can call Tesla frothy, who knows, but obviously Nikola's more emblematic of where retail traders were super interested. These, I guess, would be the places to watch as well if the air is coming out of the balloon.
Kelly, I ran into somebody yesterday who said, how about Nikola? And I said, interesting. Do you know where they build their vehicles? And they're like, I'm not sure. But I know they're red hot, and I know electric vehicles are coming on. That's the market that we're in right now. And look, Nikola someday could be a company that is making a profit and turning out vehicles. But at this point, that run-up is clearly on the enthusiasm that people believe electric vehicles are coming, and they think that Nikola is going to be a player there.
Like, the new Tesla, Tesla's old news, Phil.
Sure.
You got to find the next new thing.
Exactly.
Anyway, both of them paused today, obviously, as the market sells off. Phil, it's good to check in with you. Thank you, sir. Phil LeBeau with the latest on the autos and the airlines, all under pressure. Let's get over to Sue Herrera now for our CNBC News update. Hi, Sue.
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. Microsoft says it will not sell its facial recognition technology to police departments, and it joins IBM and Amazon in withholding that technology until federal regulations are in place. A Microsoft executive told a tech conference today the company needs to, quote, protect the human rights of people as this technology is deployed, end quote. U.S. House Republicans are working on their own police reform plan. That's according to Minority Leader Kevin McCarthy, who says he supports a ban on chokeholds. House Democrats unveiled their plan earlier this week. And protesters transforming Rio de Janeiro's Copacabana Beach overnight into a COVID-19 graveyard. The demonstration's leaders say that the protest is aimed at the government, which has played down the dangers of that pandemic and has recently stopped providing total case and death toll numbers. One of the worst hotspots in the world right now. You are up to date. That's the news update this hour. Kelly, back to you.
Yeah. All right, Sue, thanks very much. Sue Herrera. Ahead, the retail sector is getting crushed today. We're talking about the actual retailers, not the retail investors, although maybe it's a little bit of both. Anyway, we're looking at people taking profits after some major gains and sentiment souring in some states where we've seen a rise in COVID cases. Macy's, Capri, PVH, L Brands, and Kohl's are all sinking. Many of them are down. After this short break.
The station you're listening to is experiencing technical difficulties. While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
As the science and medical world continues to learn more about COVID-19, we're all learning how to best live with it. Because the news is always changing, TuneIn helps you make sure you're getting the latest information on the pandemic with live streams of CNN, MSNBC, BBC, and more. Plus, evidence-driven podcasts like Coronavirus, Fact versus Fiction, and Podcast 19. For the latest stories and reports, search Coronavirus News on TuneIn.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything from current events to untold stories from the golden era of sports.
Kill O'Neal. You know that, right? I tried to tip dunk all the free throw line one time.
Search Knuckleheads on TuneIn to listen.
The Woj Pod with Adrian Wojnarowski.
Doris, you had reason to believe that you needed to get a test for the coronavirus.
Right. Well, let's just start with the headline, which is I did test positive for COVID-19. I was so tired from Saturday the 14th through Tuesday, March 17th. I kid you not, I could not be out of bed for 5 minutes without needing to go back to bed.
The station you're listening to is experiencing technical difficulties.
Preparing the workforce for the future, an at-work spotlight event, June 18th. Exploring new technology with top CEOs, reshaping business for the path forward. To join us, go to cnbcevents.com. Sponsored by T-Mobile for Business.
Welcome back to The Exchange. We have a major sell-off on Wall Street today as investors are cautious about a new wave of COVID cases and about economic growth. The Dow right now is down 1,452 points, so we're about 100 points off the lows right now, a decline of 5.4%. The S&P down 4.5%, the NASDAQ down 3.7%. It is interesting that the blue chip industrials are the worst performer, but they've also been the catch-up trade of late. So let's take a look at the sectors, and as you can see, not a single one is in the green behind me today. The quote-unquote best performer are consumer staples, relatively solid. Kind of 2.5% decline here. On the other side, energy is down almost 7% in the session right now. Materials down 6.6%, and the financials have gotten a lot of attention for their weakness. We talked about this with Peter Boockvar earlier. They're down 6.4% today. They were down 6% yesterday. So we're talking about a 12% decline in 2 sessions, which many are tracing back to the Federal Reserve and their pledge to keep interest rates low, perhaps as long as 2022, unless the unemployment rate gets a lot better, a lot more quickly than that. Here's a look at oil. As I mentioned, energy is the worst sector, and oil is having a big drop. We were down 10% a little while ago, down about 8.5% right now. The energy spiders down 7%, and the major names in the space, Exxon and Chevron, they're down more than 6%, so not really spared the sell-off today. Let's dig into that bank move a little bit as well that I was telling you about. Both of the major bank ETFs, the KRE and the KBE, are having their worst week since May 15th. They're down 7.5% right now. Regional Bank almost down 8%. Some of the major names, JP Morgan down 6.5%. So again, big balance sheets are not being spared in the sell-off. Bank of America down 8%, Wells 7.5%. And finally, take a look at the social media stocks. These are not really being spared in the move today. So Facebook is down 4%, Twitter down 5%, Pinterest down 7%, Snap is down 4%. In fact, and we're going to speak with the CEO next hour. First, let's get to David Faber, though, who has some breaking news on Grubhub after speaking with CEO Matt Maloney earlier here on CNBC. David?
Yeah, thank you, Kelly. Yeah, one of the few stocks, of course, that is up today in this very broad and nasty market sell-off we're watching this morning. This is not specifically related, though, to the deal, of course, which has resulted in Grubhub shares being up roughly 5%. What we can tell you now is just a few moments ago learned that a lawsuit has been filed by Yum Brands against Grubhub in New York State Supreme Court. And it's specific to an agreement between the two companies that was signed back, I believe, in 2018. It was a partnership with Grubhub. This is Yum, on behalf of all of its franchises, of course. We're talking Pizza Hut, Taco Bell, in which it allowed for delivery. Apparently, last week, Grubhub terminated this agreement last Friday in a letter that was sent to Yum. And Yum is saying that that was a breach of a contract that they had, this master services agreement that they had entered into in 2018. By the way, part of that, Yum invested $200 million, so they own about 3% or so of Grubhub. They also had a director appointed to the company's board, so they expanded the board from 9 to 10. So not an unimportant partnership here that apparently is blowing up, again, with Grubhub having unilaterally removed itself from the partnership on Friday, and now Yum coming back and suing them and saying, you couldn't do that, you shouldn't have done that. We want to get an injunction, of course, against it. And apparently there was a mechanism by which they could have negotiated for new terms under the agreement, Kelly. So interesting, of course, in light of the deal itself, which we've been talking about through the course of yesterday and today, and one of the few stocks, of course, as well, that is up. So I did want to share that with our viewers at this point. Very much unclear whether it will have an impact on the deal itself, but certainly two big companies that are now going to be engaged in litigation.
David, what does it tell you about how the Grubhub process has played out overall, especially at a time when you could say these were hot stocks because of the pandemic? Delivery became a really important option. I don't know how that played into it, but what started out as a possible tie-up Uber and Grubhub now has kind of Grubhub partnering with a European company and being sued. I mean, it doesn't, I'm just curious what you make of that.
Yeah, well, I don't, it's very early here. I've got to read through this entire lawsuit. I'm not clear the connection between necessarily them pursuing the deal and deciding to unilaterally withdraw from this agreement, this partnership agreement that they had with Yum. But of course, as we've detailed over these last few weeks, Kelly, the back and forth between Uber did not come down to price, where they had an agreement, although Matt Maloney disagreeing a bit on that, but I'm pretty confident that's the case. It came down to concerns about antitrust, given these are two large competitors, and in fact, almost the only two competitors in a couple of key markets, New York, Boston, for example. Concern well-founded on the part of Grubhub that the union might get challenged, perhaps by federal regulators at the Department of Justice, or even on the ground in cities and municipalities. And so they wanted assurances if they moved ahead. They couldn't get what they wanted from Uber. They attracted interest from other parties. But what's even more interesting, perhaps, Kelly, is you've got a company now moving in from abroad, but it doesn't narrow the competitive landscape. In fact, it only brings even deeper pockets into this area, which probably means even more fighting over price, and could make things even more difficult for the likes of Uber Eats, which already loses money here, DoorDash, which is still planning on going public, and obviously now Grubhub with its deep-pocketed European owner. So we'll be watching it closely.
Yeah, no, I'm sure. And Uber down 8% today. Instacart now valued higher than DoorDash. So a lot of interesting ways this is shuffling out. David, it's good to see you. Thanks.
Sure thing.
David Faber. Shares of Corning are also dropping today amid the market sell-off. They're down 6%. We're going to have the CEO next to talk about how the company has gotten a major investment from the government to manufacture glass that will help make a COVID vaccine possible and what that means for the company. Also, check out the most searched tickers on CNBC.com right now. This is quite the list. The Dow itself is topping.
The station you're listening to is experiencing technical difficulties.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back, at the wall, it's gone!
Search classic game replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson, up with it over to Reese for one, back to Hodges. It gets away from him. Ferris trying to go to second.
It's on demand, it's free, and it's only on TuneIn. Looking for your daily fix of NFL news and analysis?
In that. So we had to blow it up with the Super Bowl predictions instead.
Look no further than the Pick Six podcast, where CBS sports writer Will Brinson gets you up to speed with what's trending in the NFL that day, so that you're always in the know.
Yeah, it's pretty revealing of Brinson's methodology for predictions. When he gets mad at people for predicting good teams are going to win the Super Bowl or good players are going to win major awards. That's how you wind up.
Search Pick Six on TuneIn to listen.
To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Avoid close contact with people who are sick. Remember, 6 feet. It's the rule. Stay your distance and always wear a mask while you're out. Avoid close contact with people who are sick. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn.
Brian Windhorst and the Hoop Collective podcast.
What about Giannis Antetokounmpo?
he is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer. Well, if the salary...
Not boundaries. Welcome back to the Exchange. A market bellwether. The semiconductor names are selling off deeply today, along with the rest of the market. The sector's down more than 4%. Let's check in with Josh Lipton in the conservatory for more on this. Hi, Josh.
So, Kelly, check out the SMH, that's the ETF that tracks the chips, and it is taking a tumble today, now on track for its worst day since May 1st. Though remember, this group has surged, Kelly. It's more than 50% rally there from its March low. It's actually on track for its best quarter since 2001. Notable laggards, though, today in today's trade would include AMD, Micron, Qualcomm, and Applied Materials. I just spoke with Susquehanna's Chris Rowland. He covers the sector. He chalks this up to profit-taking after that big move. The space is a bit overbought here, he said, in the short term. What's he telling clients right now? Names he likes include Broadcom as a play on handsets and the 5G trend. Marvell, he says, is a play on the infrastructure side. And if this dip continues, he told me, then he would look for those semi-names with exposure to autos, to industrials, and that would include names like Texas Instruments. Kelly, back to you.
All right, good stuff, and it is beautiful there. Josh, thanks very much. Josh Lipton. Shares of Regeneron and Moderna are bucking the sell-off today, with Regeneron hitting new all-time highs. This following news by both biotech companies on the COVID-19 front. Regeneron says it's begun human trials of its experimental coronavirus antibody, which would treat the disease. The company telling CNBC earlier that we could know within 2 months whether or not it's effective. And Moderna is starting the final testing stage of its coronavirus vaccine in July, which will involve 30,000 volunteers. But developing a vaccine that works is only one part of the equation. Manufacturing and distribution are just as critical. On that note, let's bring in Meg Terrell with a look at one company that's going to play a vital part in that process. Meg?
Hey, Kelly. Well, there's a question about when we get a vaccine, if we are lucky enough to get one. Will we have enough materials to manufacture them for the entire world? And one of the key components there, of course, are the glass vials that the vaccines go in. BARDA this week announced a $204 million grant to glassmaker Corning to support domestic manufacturing capacity expansion to try to support the provision of these vials for vaccines and potentially therapeutics as well. So joining us to discuss that investment and the landscape in general is Wendell Weeks, the CEO and chairman of Corning. Mr. Weeks, thanks for being with us. Tell us about this $204 million grant that you got from BARDA and how much that will enable you to increase your manufacturing capacity.
Well, what this allows us to do is to begin to put in place the manufacturing and distribution required to help facilitate actual play out of the drug in humans.
Well, in his whistleblower suit, Rick Bright, the former BARDA director, warned that we might face a glass vial shortage and that it could take 2 years to make enough glass vials just to serve the U.S. vaccine market if we do get a COVID-19 vaccine. From where you sit, does the country, does the world have the capacity to make enough glass vials on the time frames we're talking about for these vaccines?
Well, we worked with Rick for a number of years and with BARDA on their important mission. What this whole program is about is, as a first priority, to make sure that we have enough vials for the U.S. population. We still have more work to do to make sure we have enough doses for the whole world. And that still remains ahead of us, and you can depend on us to be working hard on it.
And how do you actually accomplish that? I mean, do you need to build new facilities? Can you use the existing facilities you have more efficiently? I mean, how does this process work? Because just to give some scale, I was talking with Pfizer about this, and they say right now they make 500 million doses of vaccine per year for all of their vaccines. Now, if they're successful, they could be making almost that much just for this one COVID-19 vaccine. So that scale is just massive. So how do you do this?
That's exactly correct. And we're going to be doing all the above. Here, we're going to be increasing the size and scale of our manufacturing in New York, New Jersey, as well as North Carolina. And we're going to be doubling our manufacturing workforce just to start. As this ramps And as it becomes clearer what are going to be the right treatment regimens, we'll respond with even more aggressive moves in manufacturing.
Now, you said in your announcement that with the BARDA funding, priority access will be given to designated BARDA vaccine and drug development partners. Just tell us kind of what that means in terms of operating under Operation Warp Speed, how you'll prioritize who you work with.
Well, our first sort of ring of priority will be determined by those other members of Operation Warp Speed that are with us. But then we also want to be able to support people beyond that ring. Innovation is really hard to just pick ahead of time. And so we want to make sure we have the capability to work with as many folks as we can to help meet this pressing human health need.
All right, Wendell Weeks, thank you so much for joining us to discuss what will be such an important issue if and when we're lucky enough to get a successful vaccine. Thanks for being here.
Meg, our thanks to you as well. That's Wendell Weeks, the CEO of Corning, and our very own Meg Terrell. Appreciate it very much. Let's check in on the retail ETF, the XRT, falling more than 5% now as stocks are tumbling with the rise in COVID cases in some states. We're going to get a check on the names making the biggest moves coming up. Let's also get a check on the casinos, which are getting hit today despite being reopened for business. MGM, the laggard, falling more than 12%. Concerns about demand still being extremely weak out in Macau. Those aren't helping today. Stay with us right here on The Exchange.
Introducing a new podcast, ESPN Daily, hosted by me, Mina Kimes. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. The best sports story all day, 20 minutes a day, 5 days a week. ESPN Daily.
Search ESPN Daily to listen. To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Cover coughs and sneezes with a tissue, then throw the tissue away. Avoid touching your eyes, nose, and mouth with unwashed hands. Disinfect surfaces, bottles, handles, knobs, and other places touched often. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn.
Ready for some straight talk on what's happening in the MLB? On the Barstool Sports Podcast starting 9, Dallas Braden and Jared Carrabis cut through the BS and break down the league the way they really see it.
Yeah, we're continuing our little mini-series of college baseball coaches in addition to bringing you major league players from throughout the league. If you've been listening to Starting 9 for some time now, you know that we've had a big leaguer on every single episode for probably 2 years now.
Search Starting 9 on TuneIn to listen.
PurePap, the portable app cleaner that kills more than 99% of the bacteria that can cause health problems. Use the same revolutionary technology used by hospitals with PurePap. Activated oxygen is used to disinfect and neutralize bacteria and mildew. It's a scientific breakthrough no CPAP user should be without. A dirty CPAP can make you sick, and just wiping your mask doesn't do the trick. PurePap is speedy, hands-free, and effective. Plus, it's portable, ultra-quiet, and completely sanitizes your CPAP machine, mask, hose, and chamber. Ready to get great sleep? Call us to find out how you can try PurePap free for 30 nights. And for a limited time, you can also get $50 off plus free shipping. Don't wait. Call or go to purepap.com.
Welcome back. We have a news alert on Snap. Shares down 4% today. Let's get over to Julia Borston. Julia?
Snap just hosting its annual Developer Day, announcing partnerships with developers, media companies, brands, and sports leagues as it takes steps to expand Snapchat from just being an app to becoming a platform that includes many other companies, similar to China's popular WeChat platform. Now, in its first big move into the local ads business, it's adding a free tool called Places for businesses to appear within the Snap map, which it announced now reaches over 200 million people monthly, and it's giving some small businesses 5 $500 to jumpstart their advertising. It's also opening its platform to new mini apps that can be embedded within it, starting with a Headspace meditation app and an Atom Tickets movie app, along with games that Snapchatters can play with each other. It's also introducing the Camera Kit to enable developers like Nike and the MLB to use Snap's augmented reality technology within their own apps. This is a play to get more brands to use Snap's AR technology and lay the groundwork for more AR ads down the road. Now, all of these announcements are designed to keep Snap's users engaged and to ultimately end up offering up more advertising and generating that revenue. Guys, back over to you.
How much do you think this will, I mean, I guess we could check on shares of Facebook, see if they're already down in the session today, Julia, obviously, but how much of a dent you think this will make in their competition against Facebook and Instagram?
Well, look, I think perhaps the most interesting announcement here in terms of near-term revenue opportunity is this real outreach to small businesses. We've heard a lot from Facebook. Sheryl Sandberg has talked extensively about just how important small businesses are for Facebook. What Snap's doing here is really going after that whole category of advertisers by allowing them for free to position themselves on this map that Snapchatters use to find their friends and to do other things. They're not going to be charging for that, try to generate goodwill and show the value of Snapchat, but there is an obvious transition to enable those advertisers to really spend to reach out to people who are nearby. So I think that's a huge opportunity there, and that those small businesses are incredibly valuable for both Instagram, Facebook, and of course Snapchat as well.
Yeah, and it's been a tough slog lately with the pandemic. Julia, thanks. We appreciate it, and you'll be back on Power Lunch with the CEO of Snap, Evan Spiegel. We look forward to that around 2:15 p.m. Eastern Time. Julia, we'll see you then. Appreciate it. Our Julia Borston. Coming up with stock selling. Especially, and how they've been profiting off of hedge funds. Can it last? That's next.
The station you're listening to is experiencing technical difficulties.
The Mina Kimes Show podcast. Kevin Clark.
If Josh Allen became the 10th best quarterback in football this year, they'd probably win 14 games. Am I wrong about that?
No. If you as a quarterback can't win in the Bills' situation right now, they should not extend you. So many teams, Jets, do not have the information they need to evaluate their quarterbacks based on the teams they built around. The Bills do.
Listen and subscribe to the Mina Kimes Show podcast.
Search the Mina Kimes Show to listen.
FlexShares may look simple on the outside, but inside every ETF, there are untold hours of careful construction, infinite what-ifs, and contingency plans, creating funds that help target gaps in client portfolios, tap untapped potential, and strengthen confidence in you. FlexShares, powered by over a century of investment expertise. Before investing, consider the fund's investment objectives, risk, charges, and expenses. Go to flexshares.com for a perspective.
That's been through multiple market cycles for over. I can. Talk to your financial professional or consultant for investment risks and information.
The station you're listening to is experiencing technical difficulties.
We have for 85 years. With Capital Group, I can. Talk to your financial professional or consultant for investment risks and information.
I was mandated to close March 24th.
Everything had just completely canceled. To do what I do best, build.
I'm going to do a mural. I'm going to go dig. We're going to be printing this on color shirts.
They're improving, but still.
On Squawk Box, Elon Musk and Tesla on a tear. The space launch, soaring stock price, raising the stakes for electric vehicles. Inside a company climbing for more. Tomorrow, watch or listen live on the CNBC app.
Are you a weirdo?
Oh, the weirdest. Just feel like everybody's always disappointed in me and I never live up to anybody's expectations. Hey, thanks for listening to all this. You're one of the few people who treat me, like a person.
You're welcome.
The King of Staten Island, rated R, on demand Friday.
Stop overpaying for home and auto insurance. Go to Gabi.com. Gabi compares your current rate and coverage against top providers, saving customers over $800 a year on average. See how much you can save at Gabi.com.
Have you wanted to speak a new language, but thought it would be too difficult? Then try Babbel. Babbel starts by teaching you words and phrases that gradually get more complex. Soon, you're practicing short conversations. So in 15 minutes a day, you'll be speaking a new language in a few weeks. Babbel works because it's built around real life. It teaches you everyday practical conversations that you will actually use. Babbel, language for life. Try it free at Babbel.com.
The Ridge wallet does a lot more than a typical wallet. It's small and modern, expands to hold cards and cash. It's made of military-grade materials, comes in 12 colors with a cash strap or a money clip. It blocks RFID, has a lifetime warranty and free shipping and returns. Order it today at Ridge.com.
Welcome back to Power Lunch. You can see the Dow down at new session lows. We were just down about 1,550 points. It's a 5.7% decline for the blue chips, and it has been weakening throughout the afternoon. We'll continue to keep an eye on it. Meantime, moments ago, Snap announced the launch of several new partnerships for its augmented reality and map features. That's in order to increase user engagement. It's just the latest move in social media in order to grow ad revenues. The shares are still down about 5% today, but Julia Borson is with the co-founder and CEO of Snap, Evan Spiegel, who joins us for an exclusive interview. Julia?
Kelly, thanks so much. And Evan, thanks so much for joining us today, right on the heels of your big presentation of all those partnerships.
Julia, thanks so much for having me. We're just so excited about all the products we've announced, and we're so grateful to have this opportunity to celebrate all of our partners that deliver so much value to the Snapchat community. It's been so much fun collaborating and working together with so many talented teams really across the world.
So you've really announced a range of partnerships with brands, media companies, with other apps. Some people say it looks like you're trying to transform into more of a platform like a WeChat, a super app. What is or super platform, a super app? What is your vision for how you're transforming Snap and how that'll help you better compete with Facebook and Instagram?
Well, really what we're trying to do is just better serve our community. You know, our content business really grew out of this desire that our community had to learn more about the world. And so we were able to partner with so many talented publishers and now so many more creators and people who are developing shows to serve our community that way. When we started building our map, you know, people wanted to feel like the map was personal. So many maps historically have been used just to get from A to B, and Snap's map reflects who you are and where your friends are and what they're doing. And now we're bringing local businesses into the map because our community cares so much about their local businesses. And we felt like that was a really important way to create value. So, you know, as we look to things like minis, which are a really exciting new extension of our platform, we really believe that Snapchat provides this unique opportunity to help friends connect with one another and do activities together that they wouldn't ordinarily be able to do on their phone. So just the idea of being able to, you know, book tickets to the movies together with your friends, watch trailers, pick your seats, that's a really fun collaborative activity that we believe Snapchatters will really enjoy. So I guess what I'm trying to say is, you know, we follow Snapchatters' lead, our community's lead in terms of what they want, and we're just doing our best to serve them.
And just to go back to your comment about the potential for small businesses who you're really bringing onto your Maps platform, what is the potential there in terms of advertising and specifically going after ad market share that's been dominated from the likes of Yelp and even Facebook, which has talked a lot about its investment in small businesses?
Yeah, we're really just getting started there. So this is predominantly about bringing local businesses onto the map and helping them, advertise their hours or their website, their menu, or even help people order online. So this is really the foundation. As part of it, what we're trying to do is make it really easy for local businesses to advertise. So if you're a local business owner, you can log on to our ads manager, type in the name of your business. We'll autofill that place's profile for you to make it really easy to create a Snap ad. And we're providing a bunch of free ad credits. So local businesses who are working on reopening, getting back up and running after being shut down for such a long period of time, they feel like they have our full support.
Now, Evan, there's been a lot of talk about your decision that you announced that you will not be promoting President Trump's account within your Discover platform. Drew a lot of blowback. His campaign advisor called you radical and said you were trying to rig the election for his opponent, former Vice President Biden. What's your response to that allegation?
I don't think there's been too much blowback. We've always said Discover is a closed platform and we choose the types of content we want to promote on our platform. So we're well within our First Amendment rights to decide what shows up on there. And, in terms of our business and our community, we're very focused on our values and expressing our values through the things that we promote on Snapchat. So I think it was a relatively easy and straightforward decision, and we'll continue to try to create a Discover experience that reflects our values and promotes the types of content that we think are important for our community to see.
Social media has definitely been in President Trump's crosshairs. He has this social media order, which threatens to limit companies' ability to censor or to flag potentially offensive or problematic content. What do you think of that order, and what could it mean for you and for your fellow social media companies?
Well, I think what you're talking about specifically are the proposed changes to Section 230. Actually, Section 230 was designed to promote free speech because what it tried to do was allow platforms to take the steps necessary to create a safe environment, try to remove content that's violent or threatening or otherwise abusive, but generally create a place where speech could be hosted freely and not hold platforms directly accountable for speech make on that platform. And so I think actually the thrust of Section 230 was to protect and promote people's ability to speak freely on these technology platforms. So I'm not sure, frankly, how these changes that are being proposed would impact Section 230, but I do think it is important to reiterate the First Amendment. There seems to be some confusion about the First Amendment and who that applies to. And the First Amendment is very specific. It's actually designed to protect individuals and private businesses from the government. So I think the really interesting thing here, and you're seeing lots of businesses and brands exercise their free speech. For example, NASCAR said, hey, we don't want our fans to show up with Confederate flags. That's another example of a private business exercising their right to free speech and on their premises. So I think, Snapchat really, we embrace those rights. We're grateful to have a First Amendment here in this country. And we want to use our First Amendment rights to stand up for the things that we believe in.
Evan, it's Kelly here back in the studio, and kind of touching on that diversity issue. You wrote this memo this week. It's very impassioned about racism and diversity in this country. What should we expect more from Snap on that front? This is obviously something that's very important to you.
Yeah, it's something we've been investing in for a long time, both as a company, but also as a family. And it's an issue we care a lot about. America has a long legacy of racism, really starting even before the founding of the country when slaves were brought here to this country. And so we think that it's really important to acknowledge that history, to apologize for that, and really try to make steps forward here to create a country that lives up to its ideals of freedom, equality, and justice for all. So,